Yeah, everything's great. We're started yet. Seems great. Okay, guys, now let's get started. The thing we're facing right now is really a difficult time. And today we're going to talk about the companies that will immune to the AI revolution. Now you can see that IBM has been going down very drastically in the last several weeks. It has been going down for more than 12%, more than 30% recently. Now this is Tesla. Tesla is okay, but IBM, you can see that it's doing badly. Even though the index SP 500 has been doing quite well, but the IBM is not doing so well. You can see the problem is very big, right? They have been going down from, how much is this? They have been going down like this, 30% more. And this is a very serious drop for a company that was, how much? It's more than $200 billion. Okay, a year they're worth about $300 billion. They went down for 30%. That means they have been going, the valuation, market capitalization was about $300 billion at the point. So, so why is that? Okay, and how are you going to avoid certain things like that? If you're holding an IBM, that can be problematic for you. Okay, because you just can't predict it's very difficult for you to predict the technology development over time. The first thing you realize is the relative strength compared to the index. Okay, before that it was doing quite okay, but this is quite a black swan event because there's no anticipation for things like this happening, and the large chunk of the IBM business has been encroached by a newly developed AI technology from Anthropic. Now the trade deficit needs to improve. Now let's just move on to the SP 500. Okay, let's just move into the index to show you what exactly is going on right now for the index level. You can see that even though the upward trend is still intact, the situation for SP 500 has been doing badly because you see the highly volatile market. There's a divide in stock market, specifically. For companies, especially in the tech sector, has been doing so well in the past several years, especially for the last 2 years, and the company has been, all this company has been doing so well in the past 2 years. They have been stopped since October, and all these consumer staples, all these solid traditional companies have been doing quite well. Okay, have been doing quite well because they have been ignored in the past several years because people are rushing into AI sector. And you can see the upward trend is very steady here. But even though the upward trend is still very steady, I want you to understand we're approaching to later stage of a bull market. That means the bull market is about to end in next couple of months. That's my guess, because I'm not sure how many of you guys watch this. It's coming from Tom Lee actually. Tom Lee said there are several reasons for the market market appear to be in bear market. Let's just revisit it. Tom Lee. On the first note, you realize that is the markets have been stopped going up for a while, right? Have been stopped going up for quite a while, and that's really a classic phenomenon for a peak structure because it has been market is kind of exhausted in some way. Now you can see that, let me just go through the reasons for why I think this is bear market, and we're going to go through the dominant theme. Now I'll talk about the current headlines and implications. Then we'll go through the economic calendar to see what to look for in the next couple of weeks or recently. Then I'll get into different sectors and how different sector plays out in this kind of environment, and what to worry about, and what's the long-term perspective for each of this prominent industry. Then I'll get into individual stocks to show you, given the background we have, the problem we're facing right now is just immense. Okay, we're facing a serious problem. I'm not going to lie to you. Hi there. Now you can see that it's from Tommy. The first start from particulars. Also on February 20th, the price of a Granny, ticker JRNY, was 250, and MA of 250. Total asset for $4.15 billion. And Granny J, a smaller mid-cap Granny, the price was about 27.8%, a NAVI of 27.8%, a total asset of $391 million. For Granny I, which is income-oriented large-cap Granny stocks, the price was 20%. 15 and MAA was 20. The total asset of $58 million. I want to talk about the year-to-date performance. Year-to-date, Granny stock is up to 1.18% compared to 1.11% for the S&P 500, for relative outperformance of the 7 basis points. For Granny, a year-to-date performance is about 8.9% compared to 8.5%. Now the Russell 2500 is 39 basis point of outperformance for Granny income of total return in plus. 20% plus 1.11% of S&P 500, and then performance with 82% basis point. So let's talk about macro. I think there are several reasons that why it feels like the bear market is at the moment. Today the S&P 500 is up to 1%. As you can see, looking at this chart, the little is kind of exhausted, and there's a downward trend is forming. Okay, and it's just very difficult for the stock price to continue going up at index level, and they're facing enormous pressure in upward trend. And also, the first is that gold has done so well and created FOMO, fear of missing out. Here is the thing: gold has been actually done so well, in particular because geopolitical risk and is now bigger, not larger than S&P 500 in terms of market cap. So S&P 500 is actually smaller than gold market. I'm not sure that's I've said it before many times in the past. Continuing rise in precious metal is not sending great signals for equity for multiple reasons. So sometimes it's just bad time for equity and good time for gold. The second is there have been rotation in what I call armies versus bullies. The armies are Mega 7 and bullies are AI suppliers. And you can see that the market has rotated from favoring armies, which the companies has great business, to arm makers. But here's the thing: we now created the valuation discrepancy. Discrepancy. You can see that things happen very unevenly because in the past 2 years, the market has very much favored the new technology, all this Mega 7, and the concentration for the market is just never seen before. And then, when you think about this, there are problems involved in this market, and the valuation was so high back then. And now, they're stalled since October. There are two ways to go with this. Number one is the capital expenditure just continuing to going up, and that spurs fear of AI bubble. Okay, as you have seen recent decline from Amazon and Meta and Microsoft, all this AI-driven company, they're in a serious problem. And the second is the second problem is that the second scenario is that you can see that from policy standpoint of view, you get lower interest rate and spurs capital investment across different sectors, and that's not going to happen, I think, because you have seen that recent a new appointed Fed chairman, Kevin Walsh, is quite hawkish, turned out to be, and that's not very good news. While the market is expecting, the market in general is expecting the dovish and super submissive Fed chairman next couple months, specifically in May, where the new Fed chairman going to take power at the time, and also end the term for current sitting federal chairman Jeremy Powell. You're going to see an expectation break from starting from gold market. That's fundamentally why gold had collapsed, and also silver has collapsed recently. You see the dynamic is just very stark. And let's go back to the discrepancy in the stock market. In the past, all these big players had always traded at a premium to bullish maker. But as you can see that in 2026 has flipped, and now Army traded more than 3-point PE discount to the bullish maker. Does that make sense? I don't know, but here you go. You can see that if you look at the bullish maker, Summit Power Generation and infrastructure now trade higher and PE ratio multiples than Mega 7. I think there are going to be a rotation back later in this year. We'll be mindful of that. So when you think about the AI ratio, AI development is reaching higher and higher and getting better and better, but all this valuation is dropping to a point. To a point, you're going to see that people are just have such a mixed feeling. When we talk about AI, there's three mixed feelings personified in different sectors in different ways. Number one is the excitement about AI technology. Okay, that's number one, because they think that there's so much value in that. So that's why they have this capital expenditure. And there's another layer of feeling, which is fear of AI bubble, because even though we're all excited about AI technology and they're advancing, how I put this, they're at least appear to be advancing quite drastically, but it's just there's a huge revenue gap. There's just a huge revenue gap in this sector now. And that's really a problem. Okay, that's really a problem. The other thing is so that's caused the AI bubble. Okay, that's the fear of AI bubble. Whenever the market going down, people say the fear of AI bubble going to burst. Okay, because AI sector is not making much money right now. That's the simplest reason you can think of. Another thing you have to be worried about is that the other thing you have to worry about is that a potential the disruption from AI sector. I think this part is going to be increasing over time. Now you can see IBM is the latest victim or casualty of AI development, because a large chunk of IBM's business is dependent on the very old code and old system, and few people know that right now. Fewer and fewer people know that right now, and the cost to maintain that is just very high. But IBM is that's the very stable revenue stream coming from this business for IBM. But now the new development technology for artificial intelligence from Anthropic really cracked the industry, upended the equation to automate the whole process, making maintaining much cheaper and much less costly, much cheaper in general. That's the key here. And there's nothing here. There's nothing here, which is, but the key here is the disruption coming often untimed. Okay, it's just very difficult to time the market and time the research progress when things are going to be disruptive. It's just very difficult to gauge that. The other thing you have to worry about is that the investors are really ambivalent about this too, and also there's a divergence, dichotomy between different sectors. First is coming from so you can see the dichotomy between different companies. There's suppliers and there are winners and losers, and the economy is just very stark, right? And winners is doing so good because all this capital expenditure pouring into them, and they're making money, and there's huge expectation in their sectors, and like data center build out, and chips buying and investment, and nuclear energy, and power grid, stuff like that, anything required to build up the computation power is just immensely important and in high demand, even though the application part of the company, company that's doing applications just not doing so well recently. So, and that's the problem we're facing right now. Okay, so that's the problem we're facing here. Now let's go back to S&P 500. As I mentioned, there's several risks involved in this. Let's just continue. So the AI sector is kind of stopped growing right now. As in terms of market cap, the stock price has been stopped growing for the past 2 or 3 months or 4 months right now, right? I think it's 4 months since October, 3 months at least. But when people are going to realize all this company, even though they're in traditional industry, their growth rate cannot match the AI industry. And to a point, if we're not collapsing, if the AI bubble doesn't pop, if AI bubble doesn't pop, you're going to see that we have a serious problem involved in this. Okay, you're going to see we have a serious problem involved in this. Okay, everything is great. Then, what I'm saying here is this is a very complex sector, but the dominating factor for the market right now. And there's another one, which is deteriorating geopolitical risk. Okay, remember all these 4 themes are actually dramatically important in terms of understanding the stock market, because that's what really market care about. And that's also a fundamental reason why market changes in price and explain the market dynamic in general. So I think there's going to be rotation back this year because in AI rampage, there's going to be a development in AI sector, and people are going to look back, see that, oh my God, they have been going so far, and they better catch up in terms of investing. Okay, they want to step in again because AI theme is going to be dominant theme for the future. Okay, then you have to understand. So the rotation is ahead of us, maybe later this year. But before that, we could see things going very ugly. But now I think investors are taking a firearm ready approach, meaning that they're first selling everything before they decide if they actually want to buy anything. And keep in mind that AI resilient stock out there. There are AI resilient stock out there. The software has fallen to lowest prime brokerage exposure, even according to Goldman Sachs. According to Goldman Sachs. Crypto also has been under pressure. A lot of it has to do with outperformance of global gold and risk appetite. And gold has been outperforming Bitcoin recently. and but you don't want Bitcoin correlated with gold that much, because it's not just a storage of wealth, method of storage of wealth. Or no, they're gonna have to do anything with anti-inflation, but it's as a new paradigm of financial system, as a foundation for financial system. And that's the key here we're looking for. And the tangentially, keep in mind that Epstein file, I think we have continued to sort of remain a headline story, is creating a lot of high-profile embarrassment. Okay, now of course most recently private credit is gaining resurfacing because some of the concern company like blowout, and people believe that equals now something is rolling back. I don't think the market feel it bear market, but it's the tariff is always a constant concern right now. Surprisingly, by the way, the Supreme Court surprisingly overturned Trump's tariff policy, and President Trump in terms of actually implementing, well, originally 10% tariff, but now it's 15%. So tariff can be the dominant theme right now. Still, as we have that for all the past year, the turbulence, the stuff. So tariff is going to come back from time to time to some point, and there are ways on grannies and grand income before, but now there are 8.7% and 3%. So tech hardware also another problem. Semi-ground ground transportation and aerospace and defense, life science tools, metals, mining, oil, gas consumable, and in biotech, you might think these are already doing well. That's true, but their seasonal pattern that leads to both deletion from our portfolio, and we're down on February. So there's seasonal improvement. Look at some additionals. Okay, Chevron. There's a large gap for this. Let's see Chevron. Okay, Chevron has been a very important player in the past. Not much is happening. Market is about to open in next 40 minutes. We're going to prepare you guys. Okay, you're going to see. Even though the SP 500 is rising, there's no way. I guess it's just very difficult for me to state it. Very difficult for me to say it's whether it's doing bull market or not. Most likely, I don't think so, because it's just very difficult times. If you look at all this dominant theme for the market, it is very difficult for us to be optimistic at this point. Okay. Now let's continue. Let's switch to the key topics: trade deficit and how the trade deficit impact for the market. Well, manufacturing needs improvement. Manufacturing employment fell over 8 straight months after Trump's policy. Okay, that's really key here. Okay, and another thing here is Trump isn't a deficit fan, and the deficit has not been reduced that much. Also, we're talking about the housing affordability. By the way, the fourth theme. Number one is, do you guys remember what number one theme is? Number one theme is uncertainty policy in Federal Reserve policy. Number two is AI bubble concern. Number three is deterioration in geopolitical situation. Number four is housing market, because housing market has been playing an important role across the history. So by the way, if you have questions about financial market, you can certainly ask that. Okay, you can just ask anything you might be interested. Exceeds expectations. Normally, a steep drop in hiring leads to a rise in unemployment. This time is different. The unemployment rate did rise slightly on the year, topping out at 4.5% on the November, before sliding down towards last month. So, if we go through the economic achievement by President Trump, by Trump's administration, is really not that great. But Trump, as a Republican, might face a hurdle in persuading the country that traditional measure of the nation's economic health are strong at the moment. When economic sentiment is low, when inflation has cooled, the U.S. economy slowed at the end of last year. The economy created only 181,000 jobs in 2025. The job gains rebounded in January. Another thing is here. Okay, now you can see that Hexas gave Anthropic an ultimatum. Defense chief set deadline to allow all lawful use of AI face loss of contract. Lawful use of AI or face loss of contract. Defense Secretary Pete Hegseth gave Anthropic Chief Executive Dario Amandi until Friday to comply with the Pentagon's demand for using artificial intelligence model or face cancellations of company's contract. People familiar with the matter said the ultimatum came at a Tuesday meeting of Pentagon's at the end of the stalemate. The people said, if Anthropic doesn't show more flexibility working with military, Access said he could label the company's supply chain risk and move the typically reserved for overseas company linked for foreign adversaries. He invoked the Defense Production Act to essentially force the company to work more collaboratively with the Pentagon. This is quite badass, right? You don't expect them to comply just because they're valuable. And the company dealt back AI safety commitment. Anthropic, the artificial intelligence company known for its devotion to safety, is scaling back at commitment. The company said Tuesday it is softening its core safety public policy to stay competitive with other AI labs. Anthropic previously paused development work on its model if it could be classified as dangerous, but said it would end the practice if comparable or superior model was released by a competitor. The changes are a dramatic shift from 2.5 years ago, when the guardrail Anthropic published the guiding and development testing of its new model, established the company as one of the most safety-conscious players in the AI space. Anthropic faced intense competition from such rivals as OpenAI, Elon Musk's xAI, and Google. It is locked in battle with Defense Department after it told Pentagon's company Klaus tools couldn't use them for domestic surveillance and autonomous lethal activities. Anthropic said safety policy changes is an upgrade based on speed of AI development and lack of federal AI regulation. An Anthropic spokeswoman said that changes is intended to help the company compete with several rivals against the uneven policy drawback that put the onus on the company, making their own judgment about the safeguard. And she said that safety pledge is unrelated to Pentagon's negotiation. Understand that this is very key, because let's give you a pattern to show why things be like that. So to continue the story, now you can see that Anthropic is really disruptive for all this technology, doing valuable things. That's quite impressive. But they're also having problems with their operation and business. So designating a company as designating a company a supply chain risk means that the business working with the Pentagon would have certified that they don't use Anthropic cloud model in any of their work with military, potentially affecting thousands of companies, including many in the tech sector. Defense Production Act is typically used to control critical sectors such as energy and healthcare during national emergency. And Anthropic doesn't allow its model to be used for mass domestic surveillance and autonomous weapons. Hackfast is pushing Anthropic to give the military permission to use AI models in all lawful use cases. A move the company resisted. Axios previously reported on the Tuesday meeting. The schism between the two sides is a key moment for AI industry. Before recent tension with Defense Department, Anthropic was the only developer whose model had received approval for using classified setting, for using classified settings. The ChatGPT makers, OpenAI, Google, and Elon Musk's XAI also have agreement with the Pentagon that could benefit from soaring Anthropic relationships with the military. The Defense Department XAI recently reached a deal to allow Grok to be used in the classified settings, according to the senior Pentagon officials. At the meeting with the Hackfast, Modi reiterated that the company's right lines and said they wouldn't interfere with the Pentagon's operation. People familiar with the deal of meeting said the senior Pentagon officials that ultimatum was directly related to those restrictions, and add that the company has until Friday to accept its atom. Anthropic Pentagon conflict escalated recently after Anthropic employees asked counterpart that data mining for Palantir, which incorporated clouds into its work with the military, how technology was used in operation to capture former Venezuela President Nicolas Maduro. Some administration officials learned that of the exchange and views as a suggestion. The market is about open next 20 minutes, guys. Okay, let's continue our show here. Some administration officials learned of exchange view as a suggestion that Anthropic object to the use. Anthropic said that the question was part of a routine discussion. Air safety bill fails in House after Pentagon's pressure. In Washington, the House failed to pass sweeping air safety bill Tuesday, a measure that backed by families of victims of last year's deadly mid-air collision near national capitals. After late objections from Pentagons and Republican lawmakers, the proposal had been championed by the bipartisan group of senators and by chairwoman of the National Transportation Safety Board and by chairwoman of National Transportation Safety Board. But this lost momentum after the Pentagons and chairs of House Armed Services and Transportation and Infrastructure committees raised concerns on Tuesday about the bill's restriction on military aircraft. This is something quite true. I didn't understand this. The proposal had been championed by a bipartisan group of senators and by chairwoman of National Transportation Security Board, but it lost momentum after the Pentagon and chair of the House Armed Services and Transportation Infrastructure Committee raised concerns on Tuesday about the bails restriction on military aircraft. Air safety bill fell in the House after Pentagon's pressure. Opposed the measure known as Rotary Act failed to meet the two-thirds threshold required under a fast-track procedure typically used for non-controversial matter. The bill required most aircraft spoil AIPO Bonanza. The issue of debut, but splashed that bankers came under pressure for leaving money on the table by under-pressing it. Its success succeeded ushering a wave attack offering later the year. All four companies are now trading below their IPO prices. In the case of Figma, Hyperform design software company, we now fears that AI will be able to more easily create apps and web pages. The stock got a small boost with Figma. Let's see Figma. Okay. Let's see how Figma reacts to this. Now you can see this familiar. I'm not sure Figma will continue to rise, but given the time here, it can be very difficult for them to pick up. No, they're already going down, gapping down. I think today, gapping down by 2%. Let's pay courtesy to CNBC to see what has been going on recently, and let me just give you the big picture of the market dynamic here. And now I'll get into the individual sectors. Nvidia stocks seem only marginal gains after better than expected results. There's the latest stock futures are little change as trader more over earnings from Nvidia sale falls. Russia said Cuba situation is escalating after deadly incidents using U.S. tagged speedboat. No, it's basically not much is happening right now. Okay, except for the key story with AI, and AI is going to be dominating story for decades to come. So you better understand it a little bit for to understand the potential risk involved. Okay, now let's talk about something interesting, and a political situation in Iran is intensified recently. So there's certain things that you have to be careful about. If sustained, the pace would mark its strongest month load rate since 2018. Iran's crude loading have surged multi-years high this month as geopolitical risk built ahead of a third round nuclear talks with Washington. Loading of nuclear crude oil and condensate to ship vessels jumped to nearly and jumped to nearly 27 million barrels last week, or about 3.7 million barrels a day, nearly 3 times the recent week average. Like you see, this is crucial, right? Students and pro-regime vaccine militants confront each other in Tehran on Tuesday. The political situation just intensified recently. Ambush in Sleepy Town, brought down by drug kingpin. Japanese firms facing export bans. Now, not much is happening right now, actually, but so market is probably going to be very peaceful today, if nothing crazy happened. But understand the volatility can create by itself just by trading. Okay, it doesn't have to be. It doesn't have to be something bad or dramatic happened. And prosecutors have investigated allegations that tour guides and intermediaries scammed the museum out of roughly $12 million by manipulating taking and access system. German face dilemma. German face dilemma over China trade ties. Long dependent on US for security and China for its growth. Berlin. Now you can see this European is in difficult problem right now. Please use elaborate method to avoid capture. The shadow fleets used the special technology, elaborate methods to avoid capture. Layers of Western sanctions and recent Russian ship seizures represent the toughest suit. The Russians from Iran, they just buy all kinds of stuff and shipping them to somewhere. Yeah, guys, any questions? You can ask anything if you want, if you're interested about in particular stock. What happened? Yeah, what we're having, we're still live, right? We're still live. That's meaningful. Okay. Let's talk about the difficulties in Berlin and the implications for the market right now. Okay, let's just get into the Bitcoin. Because Bitcoin is not doing well, even though they have a very strong rebound the other day, 6%, but the pressure is very high still. Let's talk about Berlin and all these difficulties, because understand we're going to go through one theme at a time, and now the most important theme right now for the market is really deteriorating geopolitical situation, and that's going to be a dominating theme for this era. That's just what it is. Right? Germany faced dilemmas over China trade ties. Because Germany has, I think it's one or two most important trade partners with China. have. So Berlin long depended on US for security and China for its growth. Germany is trying to chart its own path, but pair of high-stake visits by new leaders in Beijing and Washington in the next couple of weeks shows the progress will be neither easy or fast, not fast. The trips highlights the dilemma facing many middle powers and seeking to reduce their dependency to rival great powers while not exposing their defense or hurting their economy in the short term. So this is a dominant theme. This is quite the recurrent theme happening over and over in the history. And Germany is facing that. Germany's reliance on US protection has been thrown into question by President Trump's criticism of allies, and China pursued mechanist policy has emerged as a profound threat to Germany's economy, which is for the year hinged itself to China's explosive growth. Okay, now in Beijing on Wednesday for its inaugural visit, German Chancellor Merz, along China's skeptics, will try to set a new tone with his biggest trading partner. Less than a week later, he will travel to Washington to seek clarity about future trade relationship between the United States and Europe in wake of Trump's bruising trade policy, and German officials said. In Beijing's Wednesday for his inaugural visit, German Chancellor Merz, along China's skeptics, will try to set a new tone with his biggest trading partner. Less than a week later, he will travel to Washington to seek clarity about the future trade relationship between the US and Europe in the wake of Trump's bruising trade policies, German officials said. Merz will be sketching a twin-track approach this week, the official says. Merz will avoid confronting Chinese leader Xi Jinping and Trump with public demand and criticism to preserve the crucial relationship. At home, irreducible investment in the military and ensure that vital manufacturing supply chains aren't overly dependent on countries and court alternative trade partners from.
你那个 IP 的费用
IP 费哦，
你 IP 几个阅读是多少？
哦 OK，
你可以发给那个。
好好。So let's continue. Okay, there's we're going to discuss this problem in the further stage. The China is shocked brand new relative with Germany and most the 21st century. And let's just no, sorry, I just have to. Now, the MERS will avoid confronting China's leader and Trump with public demand and criticism to preserve crucial relationships. At home, it will redouble investment in the military, ensure that vital manufacturing supply chain on overlay not overlay impacted. Ensure that vital manufacturing supply chain are overly dependent on one country and quarter alternative trade partners sun the globe. Any smart China policy start at home. MERS says the late Tuesday before boarding his flight, he said Germany is seeking more balanced relationship with China, but added it would be a mistake to link his with decoupling from China. More balanced relationship with China, but it would be a mistake to link it as with decoupling from China. A recent procession of leaders visiting Beijing, Britain's Keir Starmer, Canada's Mark Carney, France's Emmanuel Macron, and Spain's Pedro Sanchez has fed talks of reset between these countries and China to balance an increasingly hostile United States. But Germany shows that the difficulties really require a relationship with China, and Germany's car maker, machine tools manufacturers, and chemicals producing critical industries that have sunk huge investment into China during the past 3 decades are fighting brutal competitions in Chinese market where significant overcapacity is leading to deflation and eroding profits. Volkswagen, which once made up 40% of sales and even more of its profit in China, had seen its market share collapsed, forcing it to implement its biggest job cuts and first plant closure at home in its nearly 90 years history. Oh, that's from China's point of view, this Europe that should be making concessions and seeking closer economic support from China because it's in a weak position. They don't see a need to drive a wedge in transatlantic relationship because that wedge is already being driven by Trump administration. Now just under a year in office, MERS has broken with long-term tradition of China-friendly chancellor, particularly Angela Merkel, who had did so much push to German industry to deepen tie with China. China is a revisionist great power that challenging the global power order, global order. Meanwhile, MERS has warned the European Union proposed to curb Chinese import through tariff and local content rules for clean energy and cars. Some German officials said they might not even support the requirement from Chinese direct investors to Europe and share their intellectual property with local joint venture capital partners, a rule that applies for decades to foreign manufacturers in China. Chinese stock is a brand new reality for Germany right now. This symbiosis has now ended. Imports of Chinese goods to Germany rose to 8.8% in 2025, while German export fell to 9.7%, sending Germany trade deficit with China up to 33%. Parts of the German business lobby and trade unions, long enthusiastic supporters of free trade, are pushing Berlin to erect barriers to Chinese import. But Berlin cannot afford yet to burn its bridges. A shadow fleece and elaborate method to avoid capture. We're not talking about that because tech firms emphasize around 42% of tech industry workers said their direct managers expect AI use of day-to-day work as October, up from 32% 8 months prior. According to a survey from the AI consulting firm Section, and nearly half of tech companies are reporting the positive return on their generative AI investment, compared with 35% across industries. Generative AI investment compared with 35% across all industries. And Google is this year, for the first time, factoring AI use into some employee performance review for some software engineers. People familiar with the multi-member set, this is a problem. Now let's talk about what tech firms are thinking right now and what's the consequences for them. The competency score from one of the scoring file, their create a system that improve the workflow of others. They have to also create a new reward. Whoever come up with the most effective AI-driven process wins a Vixen stipend value at several $1,000s. He will consider hiring candidates without AI fluency. During interviews, two people evaluate the AI skills. Candidate interview with conductor to expect to be test their ability to solve sample problem using AI. They're asked to explain their choice of tools, the prompt their use, and how they would have done things differently 6 months ago. Around 43% of workers said their direct manager expect AI use in day-to-day work as October, up from 32% 8 months prior. According to a survey from a consulting firm Section, nearly half of telecom companies are reporting a positive return on their generative AI investment, compared with 35% across the industry. According to the recent survey by Wharton School of University of Pennsylvania. According to a recent survey by Wharton School of University of Pennsylvania and market research consulting group, a firm GBK Collective, even in the industry that trend to be drive workforce trend, AI adoption hasn't been easy. Tech workers have actually saving them. I have many of the same feelings about AI with broader population, including skepticism about how much time is actually saving them. There is added anxiety. There's also added anxiety hearing their own CEOs talking about how AI will ultimately lead to smaller workforce. In tech, is amplified. Ultimately, yes, but we want to build companies that have more AI and powerful workforce without human being. That's the ideal goal, right?